Forex Fortune Hunters, welcome back. Tom Wilmot speaking. For those of you who are new to our videos, we've done over 100 that focus on the Forex currency markets and have been an attempt to help you learn better how to use MetaTrader, the best platform for trading Forex, with our favorite indicators and templates. And in a couple of other videos, I've tried to introduce the people who have Fidelity Active Trader Pro to the nuances of that platform. I've never done this before today, but I am going to show you in this video about how I've also kind of replicated my ideas over in Tradestation in order to trade the futures markets, in particular eMini ES. Now that's been extraordinarily volatile, and so I'm actually quite proud to say I think some of these templates really do the job for you and keep you out of trouble. Obviously, with the introduction of the micro eMini platform investment vehicles, it's possible to get in at a smaller rate and with smaller risk. And so those of you who may be exploring that might want to check out this next video to see how we're doing it here. So without further ado, hold on to your hat. We'll get started right after this. Okay, Fortune Hunters, today is futures fortune hunting instead of Forex fortune hunting. And so let's get right down to brass tacks here. I have on the wall the M contract for the ES eMini. 1 minute. I decided to just use the ES today rather than dropping back to the micro where the symbol on Tradestation would be MESM20. As a result of that, you can see what's happening as we head into the afternoon hour on April Fool's Day. This is not an April Fool's type of video, I hope. I hope it will keep you safe and trading with minimum risk and maximum reward. Okay, now those of you who have followed us over on fxfortunehunter.com and in our other videos know that we've pulled together almost a dozen templates like this one that can be used across different types of instruments, whether it's trading equities or getting ready for an options trade in Fidelity or another one of those platforms. This particular template seems to replicate very nicely across multiple instruments and multiple platforms. So here's our 1 minute chart, and as I said, it's April Fool's Day, and we're coming in right after the lunch hour, East Coast time, and so I'd like to share with you that this particular template is the one in our book, Forex Power Surge, just published on Amazon, and also in our video series, and the one we published earlier this week with 5 templates identified. This particular template is called Super GMMA Quick. Now the reason it's called that is because we do have 2 sets of moving averages. All of these, by the way, are EMA, exponential moving averages. This particular set here is representative, in my mind, of what longer-term investors are doing. And if this is in a downtrend, which you can see clearly here with the gray on top, let me open it up actually a little bit more so you can see it. I'll come back over here. Sorry, I have to get used to the different ways it works. But bottom line here, you can see these are the multiple moving averages. And basically, I think I put in here from a 30 by 5s up to 50. So that would be 30, 35, 40, 45, 50. And then underneath it, we have a quicker set of moving averages. And we, in Tradestation, right-click, Format Analysis Techniques. And in this particular case, you can see that we have the 6, 9, 12, and 15 or 16 for our short-term moving averages. Now, I have done in Tradestation, in easy language, programmed the same moving average crossovers as I have in the other Forex MetaTrader world. And a little red dot like this one would mean that the 12 or the 6 and the 15, 16 EMAs had crossed down White dot here means that momentarily they had crossed up. And the larger dot here, this one, the aqua dot, means that the larger, longer-term moving averages have also gone down. So there's no difference in how we program this from over in MetaTrader in Super GMMA Quick, in other words. Now, you can see that also, and by the way, the white line is a T3 Tilson set to 38. And so I like this T3 Tilson. It's a smooth moving average, and that also gives you some indication of what's happening now with a drop down here. And this was at 11:25, just before the noon hour East Coast time after the close of the European session. We were higher, and then we dropped back during the lunch hour. Now, this particular move here suggests that we pull back into the bands, and as we've said in our other videos, there's the space between the two sets of moving averages. These are the scalpers here. These are the longer term buy and hold, sell and disperse kinds of markets, the two different ones. And when the scalpers come back up and test again to see if they can get it, this acts almost like a cushion, as we said in our book, Forex Power Surge, a cushion that prevents them from driving higher into the long stage. So first absolute rule is you would never go long and take a counter trend trade, even though in this particular market it's been so volatile that that's really a big move in terms of what's standard operating procedure. But still in all, no counter trend trades here. No counter trend trades. Wait until things develop, and then for sure you're in this particular situation here, where we have another indicator that's available to us on Tradestation, which is called paint bars. And I've programmed this one here. I'll show you about it over in this area, format the analysis techniques. Here we go here. If the price is less than the moving average 12 EMA, then we'd paint that bar red. And if it's above the 12 EMA, we'd paint it this aqua color. So notice here what we saw. This is just a visual aid. We pull up into the bands, then we drop down, then we pull back up. We have a little chop in this particular area, but this is only a 1 minute chart, so there's plenty of time to hold your breath and hang on. And you would put your stop either right above the line here in this particular area, or if you're really brave, sometimes this will pull back to the T3 Tilson, but no matter, I would suggest that we try to keep our stop quite tight right in this particular area here. And you can notice that even though we pulled down and then pulled back, we never really breached this area. Likewise over here, we went up into the bands, and then we did have the quick drop and also the reversal of that 6 EMA over the 15 EMA. Notice also that our typical RSI 45 to 55 bands is working beautifully for us here. And so the opportunity is to say, okay, this is not going to be able to cut through the cushion. We simply don't have that. We've had to drop down. Here's our bar. And we do have to, once again, manage our contract size and decide about micros versus regular E-minis. And so from here, back up 24.83 and a quarter. Back up into this area, 24.88 and a quarter. So there's kind of a 5-point potential stop loss that you'd have to have here. And that's another reason that, depending upon your contract size, you might like to drop down to the micros. I'd also like to say that if you can get the micros overnight, notice, by the way, that the way the contracts have changed over the last 3 weeks since the volatility really kicked in, that we are limited in the overnight trades after 5 o'clock East Coast time Boston, or after the close really in New York, to full contract size. You can't trade like 25% of your basic portfolio account equity. And so therefore, if you've got some extra money in the account, the overnight session is also quite good with this particular type of a trade setup and situation. Now let me just back up basically here and see. We have the same situation here as we were going up today in a down market. You can see that the T3 Tilson worked for us well here. I like to take this kind of a configuration, an upward move, a pullback, which suggests we're down in the bands, but we haven't breached this level, and then we had a very significant move higher here, and that's 2,500 up to 2,509. So there in a period of 10 minutes is a 10-point move, which is unbelievable, really. Okay, so that's my 9:30 market open indicator in Tradestation. Here was our first move, and you can see the volatility that's here even on a 1-minute chart. Now I'd like to switch over just briefly to conclude. Let me see. Whoops, I can't do it that way. I've got to go to a different chart here. Sorry. I would like to show you one other chart to give you an idea about ticks as well. Let's see what we got going on. Is this the one? No, that's our point and figure. And we'll try this one right here. There we go. I also was able to come up with the Zeelander Signal Line. In this particular situation, I have some lines here that represented the overnight stress areas in the market. Let's get rid of those just so we can see what's happening here more clearly. Notice that when your Zeelander Signal Line, which represents the changeover of the 12 and 24, when you're trading between that, it's really a no trade zone here. Notice here that we had the red dots turn to white, which means that the moving averages have dropped down below it. We had a little pullback into the bands. Here was another pullback. Blue to red suggests that we have this 500 tick bar chart, gives us another indication of upward and downward moves. Now down over here you see is a very significant move for us. We were in between the two lines, nothing happening, and then all of a sudden we did change to white, which means our moving averages, I believe that I used the 16 in this configuration of the signal line indicator, and we pulled down below it. We pulled back to the bands, but we couldn't get any higher. Let me open it up again for you so you can see how clearly this works. Here's your move. Couldn't go higher. We're below the T3. We've come down, and a significant drop here in the 1237 area. This was the same move we were tracking over on the 1-minute chart. The tick bar charts tend to be a little more evenly spread out because of the volumes that come into the market at one time or another with the computer-based generated program sells and buys. But bottom line here, we went from 24.69 all the way down to 62. So we had another 7-point move. We came into the bands, couldn't do any better, and down we went further for another of these 10-point jobs. Notice how in the tick bar chart, finally, this upward momentum here stopped at the T3 Tilson. So as you're looking at your stop losses and so forth, you want to be careful to maybe use that as a fail-safe mechanism. Okay, folks, that's just a quick introduction to how we're doing it in futures, and I hope what it does is give you further confidence that you can use those templates that we've outlined in Forex Power Surge and in our other videos with comfort that you know your risk is going to be measured by a fairly placed stop loss, and that you're positioning yourselves for the best possible move in the direction of the trend. So, subscribe if you like our videos, give us a high five, give us a like, and please do subscribe if you'd like an alert as to when new material will be coming. Thanks for watching. Let's get some money out of this market and try to keep the wolf away from the door. See you next time.